Okay, I see that we have quite a good turnout now. So without much further ado, let's get started. Good evening and good day, ladies and gentlemen. If you are in the Western Hemisphere, good morning to you. A very warm welcome from the iSTOX family. And thank you for dialing in today to our fireside chat about livestock tokenization, how blockchain can revolutionize fundraising for farmers all across the world. This is one part of our iSTOX series of fireside chats, which will touch on a full spectrum of topics ranging from technology to investing. Our fireside chats are designed to enrich your knowledge and keep you informed about everything you need to know about the changing world of today. If you have any questions along the way, feel free to hit them down in the Q&A button below, and we will do our best to address as many as we can at the end of the presentation. I'll introduce my speakers tonight shortly. And of course, this webinar is brought to you this evening by iSTOX. So for the speakers, I'll first introduce you to the first speaker, Professor David Lee. He's a professor of the Singapore University of Social Sciences. Prof. Lee has been very involved in blockchain ever since the first few years of inception a few years ago. He is a vice president of the Economic Society of Singapore and a council member of the British Blockchain Association. He's a Fulbright scholar at Stanford University in 2015, and he has started mentoring and investing in inclusive blockchain projects. During his free time, he shares his knowledge about fintech, and advises governments on public policy, and publishes books on interesting topics like AI, blockchain, quantum computing, and other technologies. The second speaker of today will be Mr. Roy Lai. He's the founder and CEO of Infocorp Technologies, a Singapore-based blockchain company that addresses financial inclusion by enabling smallholder farmers to use livestock as collateral for loans. Under Roy's leadership, Infocorp has won the first prize of Singapore's FinTech Award by MAS and the UN Women FinTech MSME Innovation Fund in 2019. In 2018, he was also the winner of the Singapore Entrepreneur of the Year. Roy also founded Sentinel Chain during that time, and Sentinel Chain focuses on cross-border livestock-based financial transactions. He worked in the interbank payment industry and was instrumental in delivering fast and ambitious real-time interbank payment networks across 14 Singapore banks back in 2014. He brings with him over 25 years of experience in technology and finance. He's also a research fellow at the Singapore University of Social Sciences, where he teaches blockchain. Last but not least, the third speaker is Mr. Fahad Ifas, who is the CEO of iFarmer and co-founder of iFarmer Technologies, which provides end-to-end solutions for farmers and agricultural MSMEs. He has almost 10 years of experience in international economic development with renowned organizations like the World Bank, CARE International, and Swiss Contact and Palladium. He has worked extensively in South Asia and designed and managed projects in order to improve the social and economic conditions of people at the bottom of the pyramid. His experiences has brought him to countries like Bangladesh, India, Nepal, Myanmar, Cambodia, Nigeria, Thailand, and many more. Prior to starting iFarmer, he was managing a multi-million-dollar project in Myanmar to improve the access that smallholders farmers have to finance. Of course, today, this webinar is brought to you by iSTOX. So just a small introduction. We are the first regulated capital markets platform in any major financial center. Being homegrown in Singapore, we provide one-stop issuance, custody, and trading of digitized securities. We draw upon the power of smart contracts and distributed ledger technology in order to streamline the issuance and trading process. iSTOX seeks to redefine the capital markets by allowing investors and issuers to connect and transact more seamlessly and directly. Just a little housekeeping before I kick off the first presentation with Prof. David. If you'd like to ask any questions, simply click on the Q&A button below, and you will be able to input your questions where we will answer them at the end of the discussion. Now I'll pass my mic over to Prof. Lee to share about blockchain and financial inclusion. Over to you, Prof. Lee.
Thank you very much, Nigel. It's a great honor today to be here, and I thank iSTOX for inviting me, and also I'm so glad to be able to share my research together with Roy and Fahad. Okay, the first thing I wanted to talk about is about the unbanked. Right? It is very interesting in the sense that we have. Just give me a second. It's very interesting that in the World Bank, we always talk about catch-up theory, meaning that you to put it in very simple terms, you will get a lot of good returns from market which are low income. One of the reasons being that people with low income always pay higher charges than people like us, who is in the middle or in the upper, of the pyramid of wealth. So the question is always that since that the margin is so good, why is it that the banks and the financial institutions are not serving them? So World Bank has been trying to solve this puzzle for many years, and they came up with two reasons. One is because there's no access to cheap capital. And therefore, no matter how interesting it is, how high the marginal propensity to consume, or how high the margin, there's just no access to cheap capital to invest into all this financial innovation. And the reason being that there's very little trust. So the cost of trust is very, very high. So with that, for many years, we couldn't find a simple way to serve these people at the same time have a sustainable business. So there's a background of today's talk. And it is about access to cheap capital, and it's about the cost of trust. So if you look at what I have in the slides there are about just look at ASEAN alone, we have 660 million population, of which 438 million, okay? Are we having some issues with the screen? Yeah, okay. Okay, let me see whether, okay, I don't seem to be able to move that, but okay, let me move to the side, okay? Oops, this is even bigger, so let me see whether I can move it even to smaller. Okay, okay, oops. Okay, I'm sorry, somehow there's some technical problem here. Okay, I think this is all good now. Yeah. Apologies for that. So sometimes you always have technical problem. I think Roy and Fahad will explain to you some of the technical problems they will face on the ground and for blockchain as well. Hopefully not so much. But 73% of the 660 million, of which is 438 million, they're without bank account. And I'll explain to you why that is the case. But if you focus on just on ASEAN, let's not talk about other low-income countries. The unbanked are situated in 6 main countries, which are Myanmar, Cambodia, Laos, Indonesia, Philippines, and Vietnam. Of course, Indonesia is the biggest. They have 280 million or 250 million over there. Myanmar is huge, Philippines is huge, and Vietnam is huge. And the best thing that has happened, okay, in terms of financial innovation are two things. One is the digital device. Okay, with the digital device and with a penetration of 100%, we can now have peer-to-peer payments and communication. But there's another very important innovation, which is a QR code. Without the QR code, we will have to have all the payments machine. So with the QR code and with the handphone, you can do wonders. And that is one of the greatest invention since credit card, which is now not as great an invention as we go along. Now, traditionally, what happens is that when you talk about financial inclusion, if something happened to a country and everybody have to leave the country without anything at all, the worst thing that can happen to them is that they have no identity. When you have no identity, you can never open any account because nobody knows who you are. And therefore, you will never be able to have any secure transactional account. That is a major problem that you have. And people thought about that, and they thought that maybe we can just give them this account, electronic account, and then there will be a lot of payments. That is what they had in mind. And then they say with that, it will comes with borrowing because now money is being transacted and therefore people who need money, you can lend them the money. And then they start to do investment and they start to save. And at the end of the day, when they have savings, they will buy insurance and they will have education and so on. That was the traditional thinking before blockchain came along, before digital device came along, before QR code came along. But China changed all that because this triangle should be reversed or should be inverse because it's very important for you to define the needs of the user. There's no point having somebody having an identity, open an account, and they don't use it. And this is the problem with a lot of countries that they open up the accounts, 90% penetration, but they can't get any loans. The SME can't get any loans. The farmers can't get any loans. So the most important thing is that you need to reduce the risk of borrowing. And the way to reduce the risk of borrowing, okay, first of all, you need to reduce the cost of borrowing, right? So therefore, you need to reduce the risk of borrowing. And to reduce the risk of borrowing, you then need to ensure that there's enough trust. Okay, the question is how do you lower the cost of trust? And nobody knew how to do that until blockchain came along. So when blockchain came along, it's a trust machine where you can work with untrusted party and you lower the cost of trust. And you lower the cost of trust by having everybody looking at the ledger, which I think Roy will tell you a little bit more. And also because of smart contract. Because with the smart contract, it's very interesting. So two things we need to understand, okay, about lowering the cost of trust and about tokenization, okay? A smart contract is not a digital contract, okay? A smart contract has to be a decentralized decentralized digital contract. And it may not necessarily be a contract. It could be more than a contract or less than a contract, but it is a set of codes that will be able to execute some agreement among two parties related to transaction of something of value. Okay, remember, smart contract is not just a digital contract, it's a decentralized digital contract. Okay, and it's also important to know that once you have that, then you will have the livestock identity, which Roy will talk about. Once you have the identity for the livestock on the blockchain, okay, using technology, other technology, not just blockchain, to ensure that it's really there, then you will have a lot of things on there, maybe the farmer's identity, and then you will have also the cow identity, and you also have the health certificate, because anything to do with food, you want to export, you want to deal with food, is always have to do with health certificate. So this is where the three identity you will have onto the livestock identity registration system. Once with that, the micro insurance organization will be keen to insure, because now you don't have a quarrel who owns the cow, and that cow that all of us have for dinner belongs to you and not me, and so on. So there's less quarrel who really owns that cow. And if anyone who cheat on us, right, any farmers, they only can cheat once, twice, or three times, because your identity is on the blockchain and you have a credibility issue if you start to cheat a little bit more. And then with that, the lenders will come in. Now the lenders cannot really wanting to lend at 100% or even 50%, because the risk is low. And because the insurance have bring down the risk, therefore, the lenders are more willing to lend at the lower risk, maybe about 10%, maybe about 6%, maybe about 20%, but certainly not more than 20%. And that will facilitate payments, because once a loan is being dispersed, you will have to use that to buy fertilizer, you'll use that to buy your feed and so on, and you facilitate the payments. And with that, you are able to then have the life insurance. So that's where it is that, remember, blockchain has brought about a lower cost of trust with smart contract and a system of verification where everybody comes together to authenticate whatever is on the blockchain. And therefore, with that, we have access to cheap capital. And with that, I sort of stop my presentation here, and that leads to the new financial inclusion model that Roy is going to talk to you about. Thank you very much.
Yeah, thanks, Prof. David, for sharing. I think at a very high level, this is how blockchain is going to revolutionize things like financing of farmers as well as financial inclusion. So next up, we have Roy, CEO of InfoCorp, where he will share with us how this is actually done all the way from the ground to the financing supply chain and to even make it available for cross-border financing. Roy, please.
Good evening, everyone, and thank you, Nigel, for your kind introduction. Just let me avoid the technical problem that Prof. Lee was facing just now by shifting away my screens. Okay, now a lot of people ask, Singapore has no livestock or unbanked, so why is InfoCorp aiming to address financial inclusion for unbanked farmers? Now, coming from an investment banking background, I had the front row seat to seeing how the great financial crisis played out more than a decade ago. Every day, we see headline news of large international investment banks retrenching thousands of workers, going belly up. Many of my colleagues can't find a job after spending their entire life in investment banking. So it feels like the end of the world. Many of them fell into depression. Right? But sometimes a great crisis can bring out the best in people and also drive the emergence of innovations they will otherwise not see the light of days. Many of us have heard of Bitcoin today, but it was actually through the financial crisis that Bitcoin was invented. That was also when I started my journey in the blockchain evolution to this day. Now, fast forward to present day, there are 1.7 billion unbanked in the world, mostly in the developing countries, and most of them are farmers. Now, to them, every day is a financial crisis, but you don't hear headline news about them because it is not sexy enough to reach the front page news. There's no exit strategy for them, and COVID-19 is not helping the problem. But experience tells me that the silver lining is not far off, and blockchain will fast-track evolution of business models in ways that are never seen before because of the circumstances that we are currently in. Right? So this leads me to the topic for today, changing the financing landscape for farmers using livestock tokens, which I will talk about how new ways for financial inclusion can evolve with technology and also bring along new business opportunities. Now, in many parts of the world, smallholder farmers are facing difficulties in securing a sustainable livelihood from farming. Now, in general, a smallholder farmer may own 1.5 cattle and feed the family size of 7. But farming is high risk. A lot depends on the mercy of Mother Nature. It is high cost. Almost half the cost goes to fertilizers and animal feeds. It is labor intensive. Usually it takes the whole family, including wife and children, to help with farming. It is low margin. Large part of the earnings goes to the middleman that controls the market for farm producers. Later on, Fahad is going to share more about his stories about how this happens in the real world. COVID-19 are compounding the problem as the rural population may increase, along with the rise in urban unemployment. There will be more mouth to feed, and at the same time, a liquidity crunch in the economy. Now, without growing capital, without the working capital, the farmers can never increase their production to escape poverty, just like startups needs to raise funds in order to grow. You know how expensive credit card interest rates can be, so nobody will start a business using their credit cards to borrow money. Right? But this unbanked, they have to resort to borrowing, but they have to resort to borrowing from high interest informal loans because most of them have no credit history or employment history that they can use to borrow from the banks. So they have to pay interest rates that are much higher than our typical credit cards. Interest rates of about 30% a year is considered low. Right? You can easily hit 30% in 2 months in some desperate cases. So it seems like smallholder farming is really a bad business to run. And we can empathize with the problem. But what is it really means to you and me? Now, a lot of us did not realize that according to FAO, the Food and Agriculture Organization of United Nations, 80% of the world's food supply comes from the smallholder farmers. So if they cannot survive, then eventually we will be entering into a serious global food security crisis. Now, the farmers may not have credit history or employment history that they can use to borrow from banks, but they can own livestock assets, such as cattle that has inherent value. What they lack is the ability to unlock this value for liquidity. This problem is called dead capital. Now, it may seem strange that a farmer owns 2 cows that is worth $1,000, cannot even borrow $100 from the bank. Right? The reason is because these are informal assets, and there's no way for them to prove their ownership and authenticity. Right? So it is because of this gap that increases the cost of financing that Professor Lee had just talked about. Now we have seen how in the banked world, companies like Uber, Grab, and Airbnb has unlocked debt capital in our cars and houses. Our technology farm track is designed to unlock this debt capital in the animal for farmers to use as collateral for loans. So how does it work? The farm animals like cattle is tracked using an RFID, a physical RFID tamper-proof tag that can be attached physically and permanently to the ear of the cattle. This tag can be scanned using an NFC smartphone. And at the same time, a digital livestock token is issued by InfoCorp onto the farm track blockchain to the farmer. Now, it is important to take note that it's issued by InfoCorp but not controlled by InfoCorp, right? Because this is the essence of blockchain. Okay. Now, because the data created on blockchain cannot be changed or removed, so that's why it is the reason why it is physically tamper-proof using the tag and combining it with the digitally tamper-proof technology. This digital token is tied permanently to the RFID tag and is essentially represents the title to the farmer's livestock asset. So whoever owns the digital token essentially holds the title and the rights to the asset. So some people may ask, does farmer understand blockchain? Right? The answer is, a blockchain is not meant for the farmers to understand. They just use it. Right? It is for the rest of the value chain, right? Okay, to use. That's where the true value of blockchain comes in. Some people may also ask, how many farmers have smartphones? Smartphone adoption is actually growing in many developing countries. Some countries like Myanmar has already close to 100% smartphone penetration. And they're not expensive. You can get a Chinese smartphone for less than $50 nowadays. But in practice, we do partner with local agents to onboard farmers. And it is also through these agents' smartphones that the animal is tracked and attested. So the livestock token is the foundation for livestock traceability at the first mile. Because if we can solve that problem, a lot of things can happen. Using this token, government can uniquely identify each livestock and track livestock medical history to control the spread of animal disease. Insurance company can then use this medical history to price the insurance premium for the livestock and to avoid insurance fraud. Now, when I was in Myanmar, I was told that 30 years ago, right, they were able to issue livestock insurance, right, but they stopped issuing livestock insurance for the last 30 years. The reason is because last time, when the farmer buys an insurance, they own 10 cows, but they buy the insurance only for 1 cow. So insurance comes in the form of a plastic tag with the number written using marker pen that represents the insurance policy number. So they buy the insurance for 1 cow, but if one of the uninsured cow die, the farmer will pluck out the insurance tag, stick it to the dead cow to claim insurance, right? So this insurance fraud basically caused a lot of insurance companies to go bankrupt. So that's why they made it illegal for the last 30 years. Now, once you have overcome the insurance problem, banks can then come in, and then it can be used by financing companies to offer a new form of financial products. Farmers can then gain access to a new form of financing that has never existed before. And finally, because the livestock token is tradable, right, so it can facilitate the rise of online livestock marketplace. Now, using this model, right, we projected that the farm track has the potential to unlock liquidity from more than $100 billion worth of livestock asset in the whole world. How is this different from existing technologies? Now, farm track is designed to cut across financial and agriculture ecosystems in addressing financial inclusion. This is different from most technologies which are solving problems in silos. Most fintech solutions are essentially a layer of technology on top of traditional financing and insurance model. Most agritech solutions are designed for commercial farms, which actually represents the 20% of the food supply that we were talking about, right? And it's not meant for financial applications. So we are talking about 80% of this group that are left out, right, of this coverage. So FarmTrack was successfully piloted in Myanmar in 2018. Pilot was started in Rwanda last year. This year we're entering into India in partnership with India's state government, as well as the United Nations. The FarmTrack business model has won us several awards. We were the winner of Singapore Entrepreneur of the Year Award in 2018, Singapore Fintech Festival Award in 2019, Dubai Expo 2020 Award in March this year. Now, taking the FarmTrack business model next step forward, I will be introducing you to the Sentinel Chain platform. FarmTrack is designed primarily to support the local market. Now, in order to connect the local value chain to international marketplace, we created a solution called Sentinel Chain, which is another blockchain network that is designed to facilitate cross-border financing using livestock as an asset. Now, Sentinel Chain is designed to unlock the possibilities and to attract liquidity from the crypto world using informal assets in the real world. By combining the FarmTrack and Sentinel Chain technology together, livestock tokens can then be transacted with offshore financial institutions. Right? It can be fractionalized and used by crowdfunding platform for P2P lending. It can even go beyond financial applications, such as used by virtual farms, right, in gaming industry. Right? The possibility is endless. The blockchain industry is also full of buzzwords, and the latest one is decentralized finance, right? DEFI for short. But it will no longer be just a buzzword when ultimately, no matter what kind of finance, centralized or decentralized, eventually it has to be backed by something real. So I will take this opportunity to make an important announcement that we are announcing the launch of this new Sentinel Chain Consortium program. This program is designed to bring together established partners in the agritech and fintech domain with a compatible business model that has demonstrated tractions. We will also provide training and technical assistance to help with the onboarding and the grooming of these companies into experts in blockchain technology on Sentinel Chain platform. To mark this launch, I will also take this opportunity to welcome and thank iFarmer, led by Fahad and his team, who is with us today in joining us as a member of the consortium program. iFarmer already have a successful smallholder farm investment model in the developing countries that fit right into what our solutions are actually designed for. You will have the chance to hear more from Fahad later on. Our goal is to supercharge our partners through the use of Sentinel Chain and FarmTrack to accelerate their growth exponentially. Last but not least, my name is Roy Lai. I'm the CEO and founder of InfoCorp. InfoCorp is made up of a very capable team of international professionals, strong credentials, and proven track records that spans across 4 time zones. That's why we are equipped with the ability to support and launch our solutions in all parts of the world. Thank you for your time, and I hope you enjoyed the presentation.
Thank you very much, Roy, for the sharing. I think it's really good to see homegrown companies using sophisticated technology in both fintech and agriculture to solve problems even beyond Singapore, going to countries such as Myanmar and even Rwanda. So you heard from Roy that he has actually have Fahad on board in part of his ecosystem. And I think it's very important for us to also understand the big picture to what's happening in the technology and now what's happening on the ground, in the farms, in places like Bangladesh. What is Fahad doing in order to help improve the lives of these farmers? So Fahad, please.
So thank you, iSTOX, for the opportunity, and definitely, this opportunity to be in a webinar with Roy and Professor Lee. Like this is a great opportunity for iFarmer. So iFarmer is a agritech company, and our vision is to basically democratize agriculture financing and supply chain for smallholder farmers. The company is registered in Singapore with operations in Bangladesh, and we actually have started a pilot in Myanmar as well. So let me just straight away get into the problem that we have been talking about. Like, what is the problem that smallholder farmers really face? So the first one is lack of access to formal financing, right? So in Bangladesh, only 17% farmers have access to like a formal bank loan. And the 70% of the financing in agriculture is coming from informal sources. So informal sources are basically, friends and family, local loan sharks, traders, and those kind of actors who are within the vicinity of the farmers. And they offer this kind of loan at a very high rate of interest, which kind of is in the range of 30 to up to 70, 80% at times. Microfinance, although Bangladesh like microfinance was kind of like the birthplace, Bangladesh was the birthplace of microfinance, but microfinance was never really built for agriculture. It was never really designed for agriculture. And this lack of access to financing kind of affects the farmers in terms of their access to quality input, right? So when I say quality input, basically it's all about feed, fertilizer, vitamins, feed for livestock, and everything else, including like, more smart technologies like agri-machinery, sensors. Farmers just don't have the capital to access those kind of services. And 95% of the farmers in Bangladesh don't have access to agriculture insurance. In a country where floods and droughts are very common, this is something really important and critical that's missing from the services that farmers have access to. And the last part, the most challenging part, is that even if the farmers can get access to finance and inputs, they can't always sell their produce because they're like smallholders. Like the land size is something between 0 to 2.5 acres. So these are very small farmers. Some don't even have land of their own, so they have to lease their land. So which means they don't really have a lot of bargaining power. They have to rely on the middleman. And in Bangladesh and in a lot of South Asian countries where I have worked, there's like a long chain of like middlemen from which basically carries the produce from the farmers to the end consumers. There's typically like 5-7 layers of people, which means there's like a larger amount of wastage that happens. The price, the end price that the consumer pays is always high, but almost none of it goes to the farmers. Almost 50 to 60% of it is actually lost to the long chain of middlemen. So that's where iFarmer comes in, right? So iFarmer basically tries to solve these three problems. On one hand, we help farmers with access to finance, but we do that in a different way. So our model is basically we enable individuals like you and me to invest in farms, and that is also done in a very secured manner. So all these farms are insured. So which means even if there's a drought or a flood or your cattle dies for some reason, these are all insured. So your capital is actually insured. And then we ensure that the farmers get access to the best quality inputs. We offer them with advisory services by partnering with government, private sector, and also using remote sensing and IoT technologies. And last but not the least is the important part that I was saying is that we also have a supply chain platform through which we connect farmers directly to institutional buyers like super shops, processors, exporters, and those kind of factors. So this is kind of like what our business model looks like. So we aggregate all these critical services for the farmers, offer them these services, monitor them, and then because we have all the data, which farmer produces what kind of produce, when are they going to harvest, we use that to aggregate all the produce and then sell it to the market. Now, the critical part here is that the reason that most farmers don't have access to formal financing is because they live in rural areas. Most of them don't have smartphone, although that is increasing. The smartphone penetration is increasing. But even if they have a smartphone, they're probably not connected to the internet or don't really know how to use it like we do. So which makes it very difficult to find any data and monitor these farmers. So what iFarmer does is basically we have developed a hybrid model where we engage human agents who are basically independent agents who work as iFarmer field agents. Plus, we leverage the relationship that the farmers have with their local input sellers. So these local agriculture input sellers are basically mom and pop stores in rural areas where they sell, all kinds of agriculture inputs. And almost 80% of the time, these inputs are sold on credit. So these input sellers, they have their own mental model of credit scoring done. Like they know which farmer is worth the credit and who's going to give their money back. So we're trying to leverage that knowledge that is already there. And then, of course, that knowledge is kind of used or amplified using mobile technology. And on top of that, we are using IoT and remote sensing to make sure that it becomes less costly and less complex to identify the farmers, to assess them, to monitor them, and to deliver services like advisory and connect them to the market. So far we have about 5,000 farmers in our platform, and that's increasing every month. We have financed $1.3 million US till date. And of course, we are connecting almost $500,000 worth of produce is sold through our platform directly to the buyers. So coming back to like Bangladesh as a market, so there's about 16.5 million farmers in the country, and 30 million of them don't have access to formal credit facilities, right? And out of those 16.5 million, there's about 10 million farmers who are doing livestock at the moment. And let me just also remind you that Bangladesh is also one of the fastest growing economies in Asia over the last couple of years. And it's a country with 170 million people living in a country which is roughly the size of New York. So you can imagine how densely populated it is, and which puts a lot of pressure on our farmers and the agriculture sector as a whole, because they need to produce food for these 170 million people. So it's a huge task for the farmers. And at different levels, they have been neglected of these critical services, which enables them to do this in a better way. So iFarmer, basically, as I said, right now we have about 5,000 farmers in our platform, but we have actually interest from more farmers to get access to finance. And our plan is to onboard 300,000 farmers by 2024, offering them services like inputs, credits, advisory services, and also connecting them better, not only to the local market, but also to the international market or the export market. So my name is Fahad. As mentioned already, I've worked almost 10 years in agriculture and financial inclusion. My co-founder, he comes from more of a technology background, and we have a team of about 20 people with 40 plus years of overall experience in mainly three things: agriculture, finance, and technology. I'll just quickly go, what's the scope for and why are we interested to be a part of these consortiums? So mainly because our vision is to create an identity for these smallholder farmers. Right now, their only identity is their smallholder farmers. And they're basically defined according to their land size. But these smallholder farmers are not they're not a homogeneous group. Their needs are very different. Even if they live in the same village, their farms side by side, one side, side by side, but they still face the problem that their needs are very different. The types of farming technology that they want to use, could use, are very different. And to create that identity, we feel that we need more data. We want them to be more traceable for service providers, so that they can customize their service offerings to the needs of these particular farmers. Traceability of food, because we work in the supply chain part, is a big issue in our country, where more than 4.5 million people are actually at health risk for consuming adulterated or contaminated food, which covers things like high level of pesticide, chemicals, antibiotics, and stuff like that. Farmers, on the other hand, also have to deal with fake products. Again, it's a huge market. There's 16.5 million farmers, so there's always some companies trying to take advantage of that. And because farmers don't have enough money to invest in high quality inputs, so there's always a space where these low quality fake products come in. So to be able to authenticate those products will eventually help the farmers to increase their productivity as well. And last but not the least, again, it's kind of connected to the first point that I made, to the needs of the farmer based on what they're doing and their specific requirements. The government offers a lot of subsidy for farming and agriculture. As you can imagine, it's very critical for our country's food sustenance and food self-sufficiency. And that's why the government puts a lot of subsidy in it. But the challenge is that because it's difficult to identify the farmers and what they need, almost all the time the subsidy never really reaches the real farmer, or even if it reaches the farmer, probably the farmer does not get what he really needs. So overall, like, you know, the way we imagine this partnership could go forward is where we unlock investment opportunities starting with livestock, but hopefully we will expand this based on our learning and result from livestock financing to investors who are not in Bangladesh but internationally. They could be anywhere in the world, and they could actually invest in a livestock. Not only invest in individuals but also institutions. Banks, financial institutions could also invest in a livestock portfolio to start with. And of course, this helps us to also create a traceable supply chain for cattle and you know, beef especially, to which the consumers will have more knowledge and awareness about what they're buying and what they're eating. And ultimately that helps the farmers to improve their knowledge, but more than that, it gives them the capital to increase their farm productivity and their income and profit as well. So that's me, Fahad from iFarmer. Over to you, Nigel.
Thank you so much for all three of your presentations. I certainly learned a lot. And just to engage the audience a little bit before we jump into the Q&A, we have a poll for you to answer. We'll be launching the poll now. I think as the poll is going on, right, I'm personally curious as to maybe the question to you, Fahad. What is your story? What's your motivation by creating iFarmer in order to improve the situation in the world?
Right. So I think my motivation kind of came from the 10 years that I've spent in development, working across different development organizations. That a lot of development fund has been put into you know, improving the livelihood of the farmers. But the challenge has always been that we need a market-based solution, which means that it's not always heavily subsidized through donor money or through public money, but there's a market-driven solution. And these three problems, no matter which country, you know, whichever emerging economy I was in, these same problems are faced by smallholder farmers: access to finance, high-quality inputs, and the challenge of selling their produce. So that kind of motivated me to start iFarmer, so that it becomes a market-driven solution. We are just to clarify, we're a for-profit business. We make revenue, but we have a very strong impact mandate.
Cool, that's very good to hear. Okay, we have the results of the poll. We are sharing the results. So my question to Roy, right? I think Fahad talked about the market, having a free market kind of economy, helping make that happen. I think my question to Roy would be, I foresee some collaboration with the governments. So how would you approach the different governments around these emerging countries in order to implement your solutions?
I think approaching the government is the easiest part, right? And from my experience, it doesn't take long for us to actually talk to the government, because it just plays right into their goals, right? And improving basically it's energizing the agriculture sector. It is solving poverty in the countries, right? So they can see the problem right away. It's just that they didn't realize that there's actually a solution for it, right? Or there's a new way of doing things, right? So that is fundamentally where we normally started off, right? And for example, in the case of Myanmar, it's a B2G kind of business model. In the case of Rwanda, we have shifted away from B2G, right, to a more B2B model, whereby the government are doing the support work, right, and bringing together the ecosystem for us, okay, to work with. So they were the one to help us bring the banks and the insurance companies together, the agriculture sector together, right? And in the case of India, right, the model is still the same, right? We go through a partnership with the state government, right? Because they're the one that has the most vested interest to see this work, right? But once you go to talk to the financial institutions, then their objective would be, right, more of a commercial sense. Okay. So when you combine these two together, the government gives you the scale, the technology gives you the opportunity, right? And basically the financing is the glue, okay? Because agriculture side, basically the liquidity in the agriculture sector is very weak, right? So you need to tap onto the financial ecosystem, right, to subsidize the agriculture sector. At the same time, opening up the door for the financial institutions to come in. So this is how we bridge these two large ecosystem to create the case to bring everyone on board.
Oh, that's very amazing insights. I think that having this kind of government support and your understanding of like you bringing the technology, I think the economies in those countries will really improve from this collaboration. I think now we can go on to the Q&A that the audience has been asking. So we'll open the floor. I think the first question goes to Roy. Somebody anonymously asked, they seem to be quite bullish about this Sentinel chain. So the question is, Sentinel chain has a more unique market coverage and is fundamental to the economy. And the question is, will you be doing more marketing about this Sentinel chain to the crypto community because it's way ahead in terms of development? So they're asking about what are your marketing plans in Sentinel chain?
I think we have been doing things very differently from other blockchain or crypto companies. We've been pretty low profile in terms of hyping the market, in terms of talking too much and not walking enough, right? So we believe that if the result is going to be successful, let the result do the talking. Like the marketing has to be sustained and to be supported by real results. Otherwise, it's not sustainable, right? So it's going to be end up to be another nice story, right? And everyone will be excited for a few months. After that, you can go quiet again, right? So this is not the kind of business that we want to run. We are here for the long term. We are here to do something real. So I think that this has been my principle of running Sentinel Chain, and you will be continue to be done this way.
Thank you so much, Roy. I think that's an amazing way to look at businesses, focusing on the true value instead of just trying to hype the marketing or things like that about the coin.
Nigel, maybe I'll say a few words here as well.
Sure.
It's also very interesting now that with the COVID-19, the government are looking very much into the cash flow of all their citizens. And one thing that they realize is the digital infrastructure. So whether whichever international organization you're looking at, ADB, UNDP, and so on, digital infrastructure become the key growth area that they look into because they want to connect as many people as possible, and that may trigger a very interesting investment by government into this area. As Roy has shown you, most of the time it has to be B2B, and the playing field for the supply chain is never level. Okay, and therefore the government needs to come in and take a look, and international organizations need to channel their capital into the right area to build the kind of infrastructure to encourage sustainable growth, because the world is running out of growth area and everybody is scratching their head. Where is the growth area? Here we have farmers who have very high marginal propensity to consume, and you can see where with the supply focus on the food security and the supply chain traceability, which Fahad talked about, you will see that the government wants to minimize waste and improve transparency as well as to improve the quality of their export. And therefore, Fahad was talking about the inputs of the fertilizer, and so the cross-selling of traceability has become very important. And all the government beginning to realize that the waste itself is GDP growth because you can recirculate, and the circular flow of income is extremely important. So if you look around now, and people are asking, where do you invest? And I always look at it and say, of course, when people don't really understand where the place is to invest, and that's how I do investing. And why do you invest in inclusive fintech? Because that's the next big thing. Why is that the next big thing? Because we are running out of ideas where to find growth area. And of course, money has to go to people who have high marginal propensity to consume in order to have a circular flow of income to grow the economy. and who are the ones that are having the highest marginal propensity to consume, and that will be the area where investment will go to. That's how I feel. So that's my answer to that.
That's a very good way to look at it, looking at consumption as a driver for the economy in the next few years. I think the next question comes from Mr. Upali. The question is to Fahad. The question is divided into two parts. So first, what is good for farmers? Financial loan for support or making them into a self-sustainable model? And if yes, how do we make this self-sustainable in terms of financial loans? And second, do we have to give them a platform for their products in order to open their products to the global market?
Right. So, to answer the first question, I guess the financial farmers in Bangladesh historically, or smallholder farmers, in Asia, when I consider Asia, when I say Bangladesh, Pakistan, India, Myanmar, Vietnam, and those countries, they've been mostly doing subsistence farming, right? So it's more like they're just growing food for themselves. They have a piece of land where they can grow something, and part of it is consumed, most of it is for their own consumption, and whatever is left over, they try to sell it to the market. Now, the problem with that is that they never become commercial farmers. And then when in a country where you have 170 million people living in a country roughly the size of New York, where would the food come from, right? So if everyone's growing for themselves and there's not enough to sell to the market, that's the challenge. And along with that, over the years, how the economy in Bangladesh has grown is there's been a lot of migration from rural areas to urban places. The service and the manufacturing industry, of course, has developed, which means a lot of people have decided to get out of farming. And the lands were converted from farming to, a site for something else, more like a factory or a shop or something like that. So which means we need to help to commercialize the farmers, and that's where they need those financial support in terms of expanding their farm size. I'll give you a very specific example. For one farmer that we have worked, we started with only 50 farmers. Right now we have 5,000, right? So out of those 50 farmers, one farmer basically got he got a support for one cattle. Next year he came back that he said, I can now manage 3 cattle. Because with the money that I got and with the support that you have, now I'm more confident that I can manage 3 cattle. This year, he's doing 15 cattle. So just imagine the growth that farmer has, which he would never have had if the support was not there. But again, which means his family's income has increased, but which also means now there's more supply in the market, which ultimately helps us to reduce the cost of food, again, for a large population with very less amount of farms available out there. And the second part, I guess it was about
bringing
the
the
farmers
produce overseas. Yeah.
Right. So for that, I guess we will still need time because the traceability part is a big question. Agriculture produced from Bangladesh, it does. It gets exported, but mostly to the diaspora market. As you might know that Bangladesh has a large migrant community who are living in Middle East, some are in Singapore as well, and they want to buy local produce, and they feel better if the produce is from Bangladesh. So there's a local market in different countries. In New York, there's in Manhattan, there's a chain of shops where they only sell fish and meat and vegetables from Bangladesh. Now, the problem with that is those are not fetching the US dollars that the country needs in terms of foreign currency influx into the country, because these are going to a very localized market in those communities. So in order to be able to sell to larger or more institutional buyers, we need traceability. And that's where, again, it helps the farmers, because once that produce gets connected to a better market, like if I'm able to sell my vegetables to Tesco, or my fish to Tesco or Carrefour or somewhere else, of course that gives me a better revenue as a farmer, which increases my profitability. So yeah, that's also important for the farmers.
That's good. I can't wait to see some of these products at Trader Joe's in New York. I think they are very good at branding these products as very fair trade and things like that.
Absolutely.
Next question is from Richard, I think, to Roy, asking about what blockchain technology do you use?
Okay, we combine the use of actually 3 blockchains, right? So FarmTrack is actually using a private blockchain, and Sentinel Chain itself is a consortium blockchain, which we have developed since 2017. There was a question that asked about ICO. Yes, we've done in ICO, and that was done in 2017. So the purpose for that is to create Sentinel Chain. And through the use of cross-chain technology, we basically linked up FarmTrack to Sentinel Chain, and we linked up Sentinel Chain to Ethereum mainnet. So in a way, you can say that it is actually the culmination of 3 types of blockchain together.
Thank you very much for your answer. I think this is a very interesting question. The next question is from Varun. Is financial literacy important for the farmers to have? And how does this factor into your overall cost of trust? I think maybe Fahad and Prof. David would like to chime in on this question.
Right. So I can just talk about our experience. Yes, financial literacy is absolutely important. And it's surprising that farmers don't even take into account how much they're making and how much what's the cost of financing that they're getting from informal sources. And when you calculate that, they're actually not making anything. They're actually at a negative. But the only reason they continue to do that is because they know that they have a piece of land. Their father, their grandfather has been doing livestock, been growing crops. So they feel like, okay, we do it as well, because what else should I do? Because I have a piece of land, and I only know farming, right? So when we work with the farmers, part of our work is to kind of give them this education on financial literacy, which means basic. So we do a training program with the farmers called, which is more about farm management. And under farm management, we educate them about the cost of input, their cost of labor, and the expected price that they're going to get, and factor all of it in terms of making good decisions. End of the day, the choice is theirs, and they're very smart people, but sometimes it's just that because of the circumstances, they just don't factor in all the financial aspects of farming. So it's really important that we offer them the financial literacy as well.
And I also like to add that when we think about this kind of technology, that we conjure up is what we in the developed countries understand: the iBank, the internet banking, the mobile banking, the kind of interface that we see is very complicated, right? So the first question, of course, you ask is that will the farmers actually understand this, right? So like what Fahad said, actually this is an education process that ties in together with the rollout and the deployment. It is not a technology only problem. We can't go out there and pass the phone to the farmers, expect them to be on the technology, right? That's why it's a part and parcel of the human and combination of human and technology in order to make this work.
So just a short response to that is that the policymakers are beginning to understand that 2 things which is very important. One, education is very important. So they must set aside funding for education for the digital infrastructure usage. That's one. Secondly, I think also not just education of the farmers, also beginning to have the local design thinking for the user experience, so that people who are not familiar with the technology, even if they take a picture for themselves in a slanted way or whatever, the software itself are able to deal with some of this, users who are not familiar with technology, and also to let them know what are things they need to do and they cannot do in the software itself in their own languages, so that people who cannot read or write are able to do that, say, do a little bit more left or right in voice guidance. So the education is 2 prone. One is to people who need to design local software for local use, for user experience. The other one is actually for those who have financial literacy issue. But that is being looked into by most of the government now, that the international agency are beginning to focus on that.
Thanks, Rafli. I think before we break for the last two questions, let's have a final poll. We'd just like to know what the audience is interested in seeing next. Then after that, we will have a wrap up with the last two questions. I'll pause here to share the poll results. So the question is, what other alternative investments will appeal to you? The poll results show that people are interested in fintech lending, which is a good sign, as well as startups and unicorns, which is what we see it to be the trend nowadays. So I think we will end off this amazing discussion with a final question. I think this question is from Alex. Besides providing financial help, will you be providing new technologies such as hydroponics to these countries? I think there's also a question I heard about, other than providing new technologies, will even like plant that kind of farming, not just livestock farming, would that be in your roadmap in the future?
Should I answer that? Or right?
I think the question can go to either you or Roy.
Maybe I could.
Well, maybe, yeah, absolutely.
Right. So yes, right. We are not stopping at cattle, but cattle is the most visible one that we can see and we can count, we can track, we can explain. But we're also looking into aqua farming. Okay, for the ponds, for the fish ponds, shrimp ponds, right? These are things that is in R&D right now, and we're also looking into tracking of trees. Okay, so there's two types of it: timber, which is for the forests, right? And we're also looking at the coconut trees, okay, in some countries, so that you can track the tree, you can track the coconut, right? You can tell, right, with the value of the tree. Yeah, and at the end of the day, it also contributes back to solving the unbanked problem. Right. So these are just, I mean, it's not limited to this, right? We are constantly on the lookout for new ways of addressing the first mile of the traceability. Ultimately, our main focus is if we can solve the first mile, right, the rest of the supply chain is easy, right? So, yeah, I guess maybe Fahad can share a bit more about how they ties in.
For iFarmer, I'd say we started off with livestock when we started in 2018, but then we also diversified our portfolio. Right now, we work with fisheries and crops, and also adding like agriculture machinery, because there's a huge push on mechanization of agriculture, and we're also trying to support that because these are more costly for the farmers to avail. So we're also working on that. But yeah, right now our portfolio is diversified between livestock, fisheries, and crops. So yeah.
Thanks for your inputs. I think this has been amazing discussion and sharing. As for the audience, I hope you learn a lot and gain a lot from this 1 hour and around 10 minutes. I hope that you did not skip dinner for this and you get to feed both your mind and your own belly for tonight. So thank you for attending this webinar. I understand that there's some questions that we could not get to answer, but don't worry about that because Fahad, Roy, and Prof. Lee has already shared with you ways to reach out to them, and I hope that you can even take this learning even beyond this webinar itself. So if you have any questions further, you can ask them even after that. So stay tuned for more Fireside Chats. This is part of a series brought to you by iSTOX in order to help you to understand what are the current trends going across the world. And thank you once again, everyone, for coming. If you have any inquiries, do email us at media@iSTOX. Hope you have a good evening, everyone.
Thank you.
Thank you, everyone. Good night.
Good night.